Hi all, welcome to Search for Yields, the weekly newsletter from INR Bonds. I am Arjun Patsati, and in this issue of Search for Yields, we focus on what are the fixed income investment options available for investors. Now, fixed income investors and financial advisors who advise investors on their asset allocation are finding it a big problem because with yields with returns very low, provided post-tax returns at a very low level, and a lot of uncertainty on inflation. RBI, as you all know, we covered in SFY yesterday, that has again not really recognized the fact that inflation is very high. Core inflation is at over 6%, and globally inflation too is trending up sharply. And but they uh, uh, continued to keep rates at very low levels, and also and continuing with very high money in the system. So this is keeping yields across securities, bonds at very low levels, and even GDP growth projection at 9.5% is a very strong GDP growth projection, and with such high growth and with global supply inequalities, inflation expectations can rise. And clearly, investors are seeing a lot of issues in where to invest in fixed income. So here I'll just take you through what are the options available and where are the ranges. So, for example, if you look at this table here, then you have government bond yields, including state development loans. The maturity between 1 to 40 years. The yield range is between about 3.5% to 7%. Now, for a 40-year bond, you're getting just 7%, which is very low, and we don't know how things move over 40 years. So government bond yields are clearly very low, while you have uh, you have the infrastructure investment trusts like InvITs that are okay reasonably. It's a better yielding thing, yielding around 9%, 9.5% dividend yields. Now, which is pretty good. But again, you must remember that InvITs are very long gestation projects, and you have to treat it as a very long period of investment maturity period. Many invests go over 10 to 15 years of gestation in their uh, projects. And if you take mutual fund schemes, clearly they are a function of where the bond yields are in the market. And across all the funds from short-term fund to long-term income, yield fund, etc., they're they're only able to show portfolio returns of around 4.5% to 6.5% across all their funds. And yeah, I mean, you would have to get 6.5%, you would have to go higher on the maturity scale, and there's a lot of uncertainty on interest rates at this point of time as well. And with however, corporate bonds and Bharat Bond ETF, which is a mix, which is invests in only PSU bonds, AAA rated PSU bonds, is yielding in a very the short Bharat Bond ETF, which is just at around 2.5 years, I think, or even less maturity years to maturity is around 4.6%. And the latest issue of Bharat 2031 10-year ETF is is around 6.85 to 6.9%, 6.85% you can say, or 6.9%. So clearly, I think if you have to get higher returns in the traditional in the various products, then you have to go up the maturity scale. But as you all know, that if interest rates start moving, then longer maturity may not be a good option. Corporate bonds, on the other hand, offer a variety of choices, but clearly the highest safety corporate bonds are clearly in the lower range of 5.2%. But as you go down the credit scale, it goes up to 11% and even higher in many cases. So if you can find the 2 to 3 year corporate bonds in an 8 to 10% kind of range and able to understand the credit risk you're taking, I think those would be the best portfolio options for investors who are looking at something that can actually beat inflation on a post-tax basis. And clearly, there seems to be a huge disconnect in the other investment avenues at this point of time. Thank you. Obviously, INR bonds has with its retail digital bond platform is showcasing a lot of good corporate bonds that can offer reasonably good post-tax returns with the complete information on the credit risk, etc., to take your own investment decisions and also take you through a very good seamless investment process. Thank you very much for listening in. And do not forget to subscribe to YouTube channel if you have not done so already. And if you go to the description, link in the description below, it will take you to QuickInvest, a curated list of corporate bonds that will give you the right options to invest for your needs. If you're a financial advisor, then it's really uh, good for your clients. And if you're an investor too, you can invest there. Thank you very much.